Yet again, another IPO opens for subscription which goes by the name Allied Blenders and Distillers Limited. Allied Blenders IPO is a book-built issue totaling of rupees 1,500 crores. It consists of a fresh issue of rupees 1,000 crores and an offer for sale of rupees 500 crores. The IPO will be open for subscription from June 25, 2024 to June 27, 2024, and the shares are scheduled to list on BSE and NSE on July 2, 2024. The price band for the IPO is set at rupees 267 to rupees 281 per share. The minimum lot size for an application is 53 shares, requiring a minimum investment of rupees 14,893 for the retail investors. The company plans to use the net proceeds for funding two main objectives: their prepayment or scheduled repayment of a portion of certain outstanding borrowings and for general corporate purposes. Now, coming to the business overview. Allied Blenders is the largest IMFL company, that is Indian-owned, Indian-made foreign liquor company, and the third largest IMFL company in India by annual sales volume from fiscal 2014 to fiscal 2022. They are one of only 4 spirit companies in India with nationwide sales and distribution network, a leading exporter of IMFL, and has an estimated 11.8% market share in the Indian whisky market for fiscal 2023. Their flagship brand, Officer's Choice Whisky, launched in 1988, has been one of the top-selling whisky brands globally from 2016 to 2019. By August 31st, 2023, their product portfolio included 17 major brands across whisky, brandy, rum, and vodka. Notable brands like Officer's Choice Whisky, Sterling Reserves, Officer's Choice Blue, and Iconic Whisky are millennial brands, each selling over a million 9-liter cases annually. Now, coming to the market opportunities. India's alcohol market is one of the fastest growing, with recorded per capita consumption increase from 1.3 liters in 2005 to 3.1 liters in 2022. Alcohol consumption is measured by the World Health Organization as total alcohol per capita consumption in liters of pure alcohol per person per year and in grams per person per day for those over 15 years old, including both drinkers and non-drinkers. India's alcohol market, estimated at 3.1 billion liters in 2022, is projected to grow at 2.2% annually between 2022 and 2027. The Indian-made foreign liquor, which is IMFL segment, is the largest, with sales of 385 million cases in fiscal 2023, expected to reach 560 million cases by fiscal 2028. The market is driven by favorable demographics, rising disposable incomes, urbanization, and increasing social acceptance of alcohol. Now, coming to the peer analysis. Allied Blenders IPO have lower EPS compared to its peers, while its price is relatively higher. In summary, company's lower EPS and return on net worth suggest potential challenges in profitability and revenue generation compared to its peers. Allied Blenders commands a higher valuation than other listed peers when compared using the PE ratio. Now, moving on to the financial highlights. The revenue from operations grew at a CAGR of 5% from financial year 21 to 23 to 71,056 million rupees. However, it's important to note the dependence on whisky sales. In financial year 21, 22 and 23, whisky sales contributed over 95% of their total revenues. A point to highlight is that being a manufacturer and distributor of alcoholic products, they're subject to excise duty by the state governments. In fact, about 60% of the gross revenue constitutes of excise duty paid directly to the state government, which puts pressure on the company's margins. Now, EBITDA margins stood below the 10% mark on all time frames, implying higher operating expense relative to the total revenues. Profit after tax, on the other hand, has fluctuated significantly. However, in 9 months ended December 2023, they witnessed an impressive 42.9 million, reaching their highest ever profits. Now, moving on to the ratios, there's a bit of contrast. Return on equity stood at 1.03%, while return on capital employed was recorded at 24.35%. This implies that Allied Blenders is able to generate more profits from its overall capital, which includes debt and equity, and the ability to leverage debt to create additional value. While employing debt is amplifying the profits, it does come with higher interest payments, which amounted to rupees 1,279 million, eating into the profits of the company. Now, if we talk about these trends, Allied Blenders has developed strong brand recognition, evolving from a single brand to a multi-product and multi-brand company across various IMFL categories in India. It has access to an extensive pan-India distribution network, being one of only 4 spirit companies in India with such a great footprint. India's $35 billion alcoholic beverage market is poised for continued growth. ABD is well poised to capitalize with its strong strong product portfolio, competitive edge, and favorable market trends. Now, coming to weakness, companies' PAT margin and profit after tax have historically fluctuated. There is no guarantee that they will become better and business will be able to make more money in the future. Increasing competition in the IMFL industry could negatively impact business operations and financial status. Also, revenue and profitability heavily depends on whisky sales, so any decline there could materially affect the business. Inability to maintain or enhance brand popularity, especially officers' choice, may also harm business prospects and financial performance. Having said that, this is Aditi Priya signing off.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.